priced in 400 billion in revenues over the next 6 quarters. So he's talking about that real revenue growth that everyone's been looking forward to because of the massive capex. So to support that capex, you need the revenues. And NVIDIA is saying, hey, every industry is going to use AI in some form or fashion to replace labor. And that's exactly what it is. AI is labor. So with NVIDIA ripping higher, NVIDIA and Microsoft today really carried the NASDAQ up. And I think that the path is up. The path is up for the S&P and for the NASDAQ. But in the immediate term, I think it's important for us to just keep an eye on this gap here. So I want to go ahead and just share this. This is an hourly. Let me zoom in so that we can see this a little bit more clearly. This is the S&P on an hourly. And notice this gap from Sunday. When the futures opened, the CME futures opened in Chicago at, I think it's 5 p.m. Central Standard Time on Sundays. And they opened and gapped up. And so today on the Fed day, we've seen this pattern before. Do you guys remember the last FOMC meeting in September? There was a gap up on the Sunday of that week, the gap up, gap and go. And then on the Fed day on Wednesday, I think it was September 27th or the 17th, one of those two. On the Fed day, there was a push lower. It filled the gap last month. But this month, we have not filled that gap. And notice also, if I just zoom out here on the S&P a little bit further, look at this little bit of a, I need to redraw this so that it's a parallel channel. But if I clone this, then we'll be able to see, we're getting pretty close to a level of resistance here. So the S&P has just been tracking this channel up, since April. It's basically been up only since April. So it looks like with the supportive macro conditions, with the Fed now more accommodative, with the end of QT and the path of rate cuts, it looks like there are going to be several more cuts over the next, couple of quarters. I would be surprised if the S&P doesn't accelerate. And that's exactly what Paul Tudor Jones was talking about on CNBC the other day. He was talking about the conditions being ripe for there to be some type of blow off, similar to what we saw in 1999 from November of 99 to March of 2000. The NASDAQ was up 50% in that period of time. So the conditions are right for some type of blow-off top over the next couple of months. And after a blow-off top, there's usually a steep and sharp correction. Why don't we take a look here at BTC, ETH, SOL? Let's take a look at some digital assets real quick as I'm waiting for my AI slave over here, Claude Code and Cursor, to finish building out that single-page web app so we can discuss using Gamma to hedge our LPs. But as we're waiting for that, let's just take a look back on over here at Bitcoin. So I want to go ahead and zoom in. This is a daily, and the level of support that I drew in here was broken just over the last hour and 11 minutes after the FOMC meeting. Have you guys seen that meme where there's a guy sitting in front of his laptop and Fed Chair Powell walks out to the podium, and the instant that Fed Chair Powell starts speaking, whatever chart he's looking at just straight down. It's whatever the initial reaction is after a Fed day, I tend to fade it. So the initial reaction today for digital assets is to trade off, to trade down, on the Fed. But I'm fading it. I was buying ETH at 38.60 earlier, and BTC, I'm going to be a buyer of BTC here too. But that trend line support that I had drawn in, that broke today. So I'm looking for BTC to find its legs, find its footing, and it needs to get above 116. This little double top that has formed. This is the level of resistance. Now, if I just draw in a level of support here, a horizontal, 103 is an important level of support. Also, the flash crash lows. Now, notice I'm on Binance. I'm looking at Binance data here on TradingView. Depending on which exchange you use, you're going to see different values for the flash crash lows. So I like to use Binance because it's still where, the majority of trading volume in crypto occurs on Binance. That's the DEX, or the centralized exchange, excuse me, that I tend to track. So um, the level of support for BTC, the line in the sand, is the 50-week moving average right here. This is the level that Bitcoin needs to hold for this bull market to continue. But, when I just take a look at this, this is a bullish pattern. Bitcoin is clearly in an uptrend. So as long as you can stomach the volatility, even buying BTC at 111, I think, is still a great trade because I expect there to be a hell of a lot more upside through the end of this year. Notice this is the very definition of an uptrend, a series of higher lows and higher highs. BTC is in a clearly defined uptrend. So, you know, if we believe that Bitcoin, or if I believe that Bitcoin is going to make higher highs, well, then what alts could potentially outperform BTC? I think there are very, very few.